Yo, welcome back to the channel. For those that are new, we're going to go through the top movers and fallers in my portfolio this week and any stocks that I've bought, sold or added to. So please like the video. It helps with the algorithm to grow the channel. Subscribe if you're new, bottom right hand corner, and my link is down below for a free share of up to £200 if you want to use the app I'm using, which is Free Trade. Let's start with the top movers of this week. The first top mover to talk about is PayPal. So PayPal's gone up 3.64% this week. The reason why is PayPal is launching a buy now, pay later service in the UK. This lets shoppers finance their purchases over 3 interest-free monthly installments. They're taking a share from Klarna, who is a Swedish startup whose basically whole business model is around this. This might lead to a potential acquisition in the future, who knows? Or maybe they're just going to leverage their brand to take significant market share. Either way, I think this is a good move and the reason why the stock has gone up. The second stock to talk about this week is Virgin Galactic. This has gone up 4.68% this week. The reason why, it's been reported to CNBC that they're on track to conduct their next test space flight in the next coming weeks. For me, it's still a buy this stock. The price targets range from $22 as a low and $35 as a high, and you can see it's just over $22 now, and that's over the next 12 months. So if it reaches the high, that's a 60% upside from today. So good on Virgin Galactic, and obviously we'll see if they actually launch their space flight. If they don't, then obviously that might be a negative thing for the stock. The last top mover to talk about, and the main top mover, is of course Proud Flare or Gucci Mane Le Flare, whatever you want to call it. This has gone up 25.76% this week. The 1 year price target originally was $30 to $55. You can see that it's now gone past $55, so there will have to be some revisions of price targets. It's going to be interesting to see what happens there. The same information I mentioned last week, because it was a top mover last week with an 11% increase, all about the earnings per share and the expected earnings that's going to be coming out in November to be good. That's still obviously there. But the other thing that also happened this week is obviously them launching their Cloudflare One platform, and obviously them launching this platform has given it a very significant boost this week, and taking it to, obviously it's been my biggest holding anyway, and I'm at 47% on it. There was a time this week where it was a bit higher, over the $60 mark, but it's sort of tailed off towards the last part of the week. Now onto the top fallers. The first top faller to talk about is Amazon. Amazon's gone down 0.42%. Now, the reason slightly is that I think people are apprehensive about the impact of Prime Day. There is some research to suggest that it's gone up 36% from last year's performance. But because Amazon hasn't come out and said, you know, it's been the best Prime Day ever, we've done better than Cyber Monday and Black Friday and so forth, that's probably some of the cause for concern, and probably the reason why it started to tail off, because actually at the beginning of the week it was doing quite well. So I think that's probably the main reason why it's fallen. But as I've always said, a 0% or under 1% movement for a growth stock is really inconsequential, to be honest. The next stock that's the top faller is Legal & General. This stock has gone down 4.03%. The main reasons is that the FTSE 100 index has been hit by rising Brexit uncertainty, as you guys definitely would have seen in the news, and also the growing threat of another national lockdown. What we've also seen in the currency markets is that the GBP to EUR has been, the pound to euro has basically been fluctuating between 110 and 111, which is incredibly low this week. And the pound to US dollar has dropped from 130 and closed to around 129. So typically when the pound drops, actually the FTSE 100 tends to increase. But I think because the FTSE 100 has other pressures such as the lockdown and such as Brexit, then I think also it's actually being impacted and being hit on there as well. The last top faller to talk about is Lloyds. So in terms of how much it's fallen, it's 4.31%. The actual reasons are all of the above, so the same reasons as Legal & General. However, it's also a combination of rising unemployment figures as well, which typically has a bigger impact to banks and banking because of the fact that they lend out money to consumers. So if people are unemployed, they potentially can't pay back. If they can't pay back, then the banks aren't going to recoup that money and obviously their profit as well. So that's why it has a bit more of a stronger impact for banks than it would for an insurance company. Also, the Brexit uncertainty as well, and also the prospect of negative interest rates, which isn't going to be good for banks because obviously they typically charge a percentage on top of whatever the Bank of England base rate is, and so obviously that's going to have a negative impact to their balance sheet as well. there isn't obviously a clear sight for a COVID-19 or a Divock-91 vaccine and so forth. So again, it's not really clear what's happening there. Me personally, I'm still going to try hold strong as much as I can on Lloyds, but I am definitely considering all options to see whether or not there's opportunity elsewhere as well. So I'll be looking into that, and stay tuned. Now, I've sold a stock. The stock that I have sold, which you can see here, is Uber. So let me bring Uber up onto the screen. I sold Uber primarily because I wanted to take up an opportunity with another stock, and I felt that excluding the UK stocks being illegal in general, and obviously Lloyds as we just spoke about, I felt like the other stock that I have with the least potential is Uber, primarily for all of the reasons we've spoken about on this channel: the regulatory issues, the stuff around lockdowns, obviously it's going to impact their ride hailing business, the competition in the food delivery space as well. So I felt that actually it might do well, but I feel like there's a lot more concerns I have with Uber than I do with, you know, my other holdings. So because I had a really small position, to be fair, it was only around £950, I felt that actually combining that with the money that I already had in my ISA allowance and buying a new stock was going to be best for me, at least up until the next ISA allowance comes in. And once that care package drops, then obviously I'll reevaluate where I reintroduce Uber into the portfolio at that point. So the stock that I bought, as you may have seen, is this stock right here, which is IPOB, Social Capital 2. So this is basically a SPAC from Social Capital run by Chamath. I might do a separate video on SPAC. So if you want a separate video on SPACs, how they work, and you know the benefits, the pros and cons of them, hit me with about, I don't know, 300 likes if you'd like to see that. The reason why I bought IPOB: they're growing their revenue, expected to be profitable by 2023. Their market share across the US is expanding. Their main competitors, Zillow, Instant Offers and OfferPad, doesn't have the full value proposition that Open Door actually has. Also ARK, so we did a video earlier this week on ARK and Kathy Woods and some of her ETFs. Go check that out if you haven't seen it already. They have a big position in Zillow, which is obviously one of their competitors. However, they've initiated a smaller position in Social Capital 2, which is obviously Open Door, and they're going to slightly start increasing their Open Door position. And what you've started to see is that they've actually started decreasing their Zillow position. So I feel like they understand that there are some risks involved, but they actually see over the long term that Open Door might actually be a better position to have within their funds than Zillow would be. So it's definitely going to be interesting to see. In terms of my horizon for this stock, this is definitely a 5 to 10 year stock play. So it being in the red for me right now is not an issue whatsoever. I'm going to continuously be adding to this position and hopefully get this position to around I'd say 6 to 9k is probably my target of getting this position. And then once it hits somewhere within that mark, depending on where it's at, I'm just going to leave it and just let it ride out for, you know, for the next 5 to 10 years. That's my goal for that, basically. Anyway, thanks you for your time. Hope you liked the video. Please like the video if you did. Subscribe if you're new. Join the board members if you want to join the board and get more information about why I bought certain stocks, and if you want to generally chat about the market and more stuff. So yeah, the link will be down below if you want to do that. Other than that, enjoy your weekend, take care, and last but not least, peace.